A lot of people don't want to get rid of their 2.5 or 3% interest rate because they think of that as their baby, right? But the other day I did what is called a blended rate for one of my clients. He had a super low interest rate, but he also had a lot of debt that he had accumulated over the last 2-3 years. And so in this blended rate that we did for him, we had his car note in there, all of his credit card interest rates, his personal loan interest rates. So what we do when we do this is we take your super low interest rate and then we take all of your other interest rates and we get the blended rate. So for this client, he had a 3% interest rate on his house and his blended rate ended up coming out to a 9%. So yes, you may have a 3% interest rate on your mortgage, but what is your actual blended rate and how much are you really paying on all of your debt that is on your credit report? So I say this because if you'd like to see what that looks like for you, then I would love to just give you a simple breakdown of what your blended rate is and if a cash out refinance actually makes sense for you to consolidate all of your debt. Because right now we could do a cash out refinance with around 6 to 6.5%, depending on credit, of course, and depending on what type of program we put you in, of course. So if you would like to see what that looks like for you, you can either drop a comment down below, shoot me a DM, or send me a text at 562-481-8821.